What's going on, everybody, and welcome back to the channel. In this one, we're going to be talking about a stock that I am buying right now. I've been buying for years, and I have huge conviction on this company. But just because I am buying into this does not mean that you necessarily need to. It's a risk that I'm willing to take. I understand the risks involved and all these different things. So we're going to go over why I like this company, a few risks about the company to talk about, and a ton of different things that I really like about this stock. So if you do enjoy this type of content and you want to get good stocks to find all the time and stocks to avoid, different things like that, make sure to subscribe to the channel and turn on post notifications so that you don't miss out on any of my future videos. But let's go ahead and kind of get straight into it. So as you can probably tell, the stock we are talking about is going to be ticker UPWK, Upwork Inc. This company, I'll kind of just show you their profile to give you a little visual, but together with their subsidiaries, operates as a work marketplace that connects businesses with various independent professionals and agencies all over the world. So pretty much what Upwork does is they act as this online marketplace where if you're a business and you need a project done or something like that, you can hire somebody who can do this project for you, and Upwork is like the middleman in finding that person for you. So maybe you need sales and marketing done, design and creative. Let's say, for example, you needed some accounting work done. So what you do is you would go to finance and accounting, and an accountant would have their services listed on Upwork for a different hourly rate per se. And instead of Upwork, or instead of your company having to go buy or go hire an accountant, what you would do is you would just pay an accountant who's a freelancer to do this one-time task instead of having to go through all these other expenses and all this other work to find a full-time employee. But let's go ahead and talk a little bit more about Upwork. I mean, they are trading. They did just kind of fall through a pretty strong support level, but then they are coming back up and testing it again at about 11.25. If we can break through this would be definitely pretty solid. I mean, they were trading in this since about October, just kind of going up, coming back down, and different things like that. But I do think that there is upside potential long term, regardless of whether the stock continues to fall over the next short term. I am going to continue to buy because I see massive upside potential. Over the past, on Friday, yesterday, it went up about 1%, but over the past 5 days, it has taken a massive dip of about almost 9%. So I do think that, there's really not any news coming out about what happened with the stock. I mean, the market this past week was pretty red. The S&P was down about 2.5%, so it does kind of have that conflict with it. And we'll talk about it a little bit more. But if we go ahead and just kind of show you Upwork's financials, they do have a good gross profit, revenue increasing quarter over quarter, year over year, looking very good. But their net income has been negative. If we go ahead and show you their net income, it's not been the best. Okay, so if we go ahead and I'll also show you the cash flow, which you probably can guess is negative. I believe this is another reason why it has fallen so far over the past year, is simply because the cash flow is just not that well there. And they've talked about this. They had to raise a lot of expenses just with different things going on. I mean, this is an international company. They have to deal with conflicts such as the Russia-Ukraine war and expenses being incurred because of that. They did also increase marketing expenses and R&D by a little bit. So they are making expenses for good use. But I do think if this company can really kind of get control of their cash flow, it's going to be massive. So let me go ahead and show you a few things that stood out to me in their investor presentation for the Q3 of 2022. I mean, they do have the math to say they have a $1.3 trillion opportunity, which is very, very big. And then to show you a little bit more, here's a little bit more things that were pretty important. There's about over 10,000 skills that you can offer on Upwork, which is massive. 73% of these people do have college degrees, which is a pretty credible thing to have whenever you're selling your own services to companies. 50 of these categories have over $10 million in gross sales volume, and then highly skilled in over 180 countries. That's very, very solid. So for the people who sell their services, the talent plans, Upwork offers 3 different plans. They have Basic, Plus, and Agency Plus. To break it down, Basic, if you just wanted to make an account, test out how the service works, you would make a Basic account. Maybe you start making some sales, you really start seeing some potential in this, you would go to Plus. You pay a little bit more, but now you get a customized profile URL. You can go sell your services to external third parties and different things like that and use Upwork. And you have Agency Plus. This is kind of almost if you wanted to start your own agency and you wanted to hire other people to join your agency and sell the services on Upwork to businesses. And then we can go to client plans. It depends how much do you use Upwork. If you use it a lot, you can use enterprise compliance. If you don't use it that much, you could probably use client marketplace, and enterprise standard is somewhere in the middle. Then we have creating a virtuous cycle. This is pretty solid. I mean, they kind of just exploit the value that they bring to the table, value for talent, value for clients, and then how bringing value to these two parties brings in so much more value for Upwork because it causes a recurring use cycle, which just leads into more clients, more talent, better clients, and better talent. And the cycle just continues and continues and continues and helps this company just grow and grow and grow. So to show you some more things about this company, here's kind of how it's all been working. The revenue has been very solid. Q3 22 to Q3 21, a 24% increase. Gross services volume increase as well. Now the EBITDA did not do that well. As I said, there were some losses that were made, very negative this past quarter. But they are making a recovery. This is kind of just something that I see as like a little slug in the park. I think they're going to recover. I believe the team, they've recovered before. It's just a rough time right now. But they have about 818,000 active clients with roughly 5,000 gross services volume per client, which is huge. And then their client growth is also just very high right now, continuing to grow quarter over quarter from Q2 to Q3, 9%. That's massive growth if you ask me. And their gross services volume per client is also increasing. So this is two birds, one stone. I really, really do like to see this stuff. Huge upside potential in my personal opinion. And then show you a little bit more about this company, just kind of some guidance that they have for what's going to happen from the fourth quarter. They expect to make about 160 million in revenue with about a $1 to $3 million loss in EBITDA. And for the entire year, it's about a $6 to $8 million loss in EBITDA, but 615 to 617 million in total revenue. Now, as I showed you earlier, I didn't necessarily point it out, but they have a market cap right now about $1.48 billion. So this is definitely high potential. If they can make this revenue not negative, I do believe this is going to hit big once they can announce profitability. This is going to hit big in my personal opinion. I see massive upside potential. I mean, as we can see for next year, for 2023, they are expected from analysts to have about estimates of about 3 cents a share positive. That's very good. Sales are expected to grow to 729 million. Very good, 18% growth year over year. Continuing to look at some more things, just to show you some statistics on the company. I mean, the profit margin is not the best, but revenue per share, about $4.58. Quarterly revenue growth is increasing. They have good gross profits, looking very solid. And the last thing I want to show you about this company before I end the video is what a lot of people like to look at. First off, we're going to look at the price target. Okay, they have about an 84% upside on their average right now to about $20.75. As we saw earlier, it trades for $11.25. So this is definitely something that's pretty good. I mean, this is 7 buys, 1 hold, and these analysts, they for the most part know what they're talking about. So I would take this pretty nicely, but also take it with a grain of salt. Don't just buy a stock because it has a strong upside. Furthermore, if we look at institutional activity, how the inflow is going, I mean, over the past 12 months, it is highly positive compared to the amount of outflow. But for Q3, it was a little bit negative. But just kind of give you some note, I mean, a lot of big institutions are buying in. I know, for example, Goldman Sachs did announce that they increased their position by about 30%, which is about, I think it was 11 million shares, or $11 million worth of shares into their position. So that's definitely something we really like to see. But everybody, that is going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future videos. Thank you for making it to the end of this one, and I will see you at the next video.